Welcome to Bite Size Business, the channel where we use financial metrics and ratios to gauge a company's financial health. In this video, we will look into the three largest publicly traded companies based in Alabama. This is the first in a series where I go through the largest companies in each of the 50 U.S. states. Instead of a bite into business today, we have a banquet of Alabama's largest companies by market cap. Today's banquet comes as a buffet, and the options today are Vulcan Materials, Region Financial, and Encompass Health. Looking at this little graphic thing from finance charts, we can see the largest companies in Alabama. The largest is Vulcan Materials with a market cap of 38 billion, followed by Regions Financial with 23 billion, and Encompass Health with a market cap of 10.4 billion. And then it kind of cuts off to 5 billion and then into the hundreds of millions. Those still aren't small companies, but they're smaller than what we would be looking into today. So we are going to start today with Vulcan Materials to take a look at their Yahoo Finance stuff. We can see that Vulcan trades under the ticker symbol VMC at $286.86 per share. And then this is their company website where we can see some of their stuff, like their where they do business, and they have a clear path from the west coast to the east coast. A short history of the company is that Vulcan is one of the largest producers of construction goods like concrete and gravel. Um, the company started back in 1909 as Birmingham Slag, and they have a large history of M&A starting in 1980 with the purchase of Reed Crushed Stone in Kentucky. Almost 2 decades later, in 1998, they did their second acquisition, taking ownership of CalMat, an asphalt and concrete maker based in LA. In 2005, the company divested chemical assets and used the funds to buy 11 rock aggregate operations and 5 asphalt operations. In 2007, they did their largest acquisition in the company's history, buying Florida Rock Industries for $4.7 billion, but 7 years later would sell many of its assets to Colombian-based concrete company for $720 million. Most recently, the company purchased U.S. Concrete for $1.3 billion and plans for it to be a fully integrated subsidiary, starting debt-free with ample working capital for expansion. Moving on to Regions Financial, we have one of the largest banks in the south of the United States. Regions is the largest deposit holder in both Alabama and Tennessee and holds over $100 billion in deposits. Regions first began as Alabama Bankshares, or as First Alabama Bankshares, and was formed by the merger of 3 banks, the First National Bank of Montgomery, Exchange Securities Bank of Birmingham, and First National Bank of Huntsville. The Interstate Banking Bill of 1986 allowed the bank to expand out of Alabama, and so expansion began. They expanded into Florida, followed by Georgia, Tennessee, and Arkansas. The bank continued this state-by-state expansion until it began its course of what I like to call hypergrowth in 2004, where it merged with Union Planters Bank for $5.9 billion in 2004, followed by a $10 billion acquisition in 2006 when it purchased AmSouth Bank Corporation. Those are some of the most recent acquisitions it's had. It hasn't done too much M&A since that 2006, probably due to the 2008 financial crisis kind of slowing down a lot of banks all across the United States. And now the business is worth, I believe it was $28 billion. So that $10 billion acquisition is a large part of what that company is today. The final company in today's video is Encompass Health, which was formerly Health South. It was founded in 1984 with 2 locations in that year, the first in Little Rock, and later that year one in Birmingham, Alabama. In 1986, 2 years after its founding, it would be taken public on the NASDAQ, but by 1990 the company had reached 50 facilities across the United States, and in 1992 the company did $400 million in revenue, achieving that feat in only 8 years. Throughout the 1990s, the company would do 4 acquisitions within the $100 to $300 million range. In 1997, Health South would acquire Horizon CMS for $1.8 billion, but would sell off non-synergizing assets for $1.15 billion. The company was also the healthcare company that partnered with Oracle to build the world's first all-digital hospital, pushing us closer to the modern experience we have now. In the 2000s, the company faced a laundry list of legal issues and fines, causing the company to be delisted and then relisted again, where it would sell off assets for over $1 billion to pay off debt and fines. And in an attempt to fix its image in 2014, it would acquire Encompass Home, Health, and Hospice, and in 2018, it would steal the name and change from Health South to Encompass Health. Taking a look at the Excel spreadsheet for this series, we can see that the three companies are Vulcan Materials, Regions Financial, and Encompass Health. Vulcan's is in the materials industry, Regions Financial is in the financial industry, and Encompass Health in the healthcare industry. And all three companies are based in Birmingham, Alabama. The market cap ranges, with Vulcan being worth the most at $38 billion, followed by Regions Financial at $23.8 and Encompass Health at $10.4. Looking more at Vulcan Materials, we can see a revenue of $7.4 billion, paired with an EBITDA of $1.95 and a net income of $850 million. Looking at Regions Financial, revenue is similar at $7 billion, but EBITDA is much higher at $2.8 billion. Net income also stood at $1.6 billion. Revenue from Encompass Health was $5.2 billion, with $1.14 in EBITDA and $420 million in net income. Looking at the debt, liability, and assets for the companies, we can see that Vulcan Materials has $3.8 billion in debt. That makes up about half of their liabilities, which came in at $6.48 billion, and they have $14.3 billion in assets, leaving shareholders with about $7.9 billion in equity. Looking at Regions Financial, total debt is $7.5 billion, total liabilities are $138 billion, $700 million, and assets are $157.5 billion. The reason their assets and liabilities are so high is, as a bank, deposits are actually considered a liability because it's cash that you will have to pay back at some point, and loans are considered an asset. And so if you go to Regions Financial and you deposit $100 into the bank, their liabilities would increase by $100 because of that deposit, and assets would increase by whatever loan value that they're able to give. This leaves Regions Financial with a shareholder equity of $18.7 billion. Looking at Encompass Health, we see a total debt of $2.8 billion, total liabilities of $3.7 billion, and total assets of $6.5 billion, leaving shareholders with an equity of $2.7 billion, which is right about what their total debt is. Free cash flow for Vulcan Materials was $800 million. They paid $240 million in dividends and $219 million in stock buybacks. This compares to Regions Financial, who did $2.5 billion in free cash flow, paid back almost $1 billion in dividends, and did over $1 billion in stock buybacks. Encompass Health pays a small dividend of $60 million, which comes paired with their $270 million of free cash flow, and they did not do any stock buybacks. I will mention that free cash flow is a number you get after dividends and buybacks are paid, and it comes from their operating cash flow and all of their expenses they have after that. Free cash flow is just the amount the business takes in, and so any percentage you see where a company might pay out 100% of free cash flow, that means they're actually paying out to shareholders an equal amount to what they are taking in at the end of the year. Looking at the employees, we can see Vulcan is the smallest with around 11,000 employees. Regions Financial in the middle with 19.6 thousand employees, and Encompass Health the largest when it comes to employees at over 27,000. Looking at the ratios for these companies, we can see that Vulcan Materials has a very low debt to equity of 0.49, a relatively low debt to EBITDA at 1.97, a strong EBITDA margin at 26%, and a strong net profit margin at 11%. Due to that, I did give them a green light as they are low debt compared to the money that they're bringing in, and they're probably one of the better companies we've looked at thus far. Looking at Regions Financial, we see another company that looks to be doing quite well. A very, very low debt to equity of 0.4, but debt to equity might be a little off for the banks because of deposits and loans being considered liabilities and assets. Looking at the debt to EBITDA at 2.69, that's more in the middling range, but nothing that we're scared of seeing. EBITDA margin is 40%, which is not uncommon for banks, but quite high just for a general company. And net profit margin of 23% is very high, and so that's a good ratio for a bank, but just for a normal company, 23% is quite large. And then finally, looking at Encompass Health, we see a debt to equity of 1.03, a debt to EBITDA of 2.45, a strong EBITDA margin at 22%, and a strong net profit margin at 8%. All three companies we looked at today got a green health rating, as all companies were either low or neutral in all debt ratios, which is good. They all had high EBITDA margins, and aside from Encompass Health, all had high net profit margins. And that 8% net profit margin seen out of Encompass Health is towards the upper side of that range. We're looking for 7 to 10% within that neutral range, but 8% is above that 7, and that 7 is really the neutral. Anything above 7, I would be pretty pleased with when it comes to a company's profit margin. But that 10% is just really high, and so that's why the ratio or the percentage is set at 10%. And so they all do get a green light. Buybacks as a percentage of free cash flow, all companies are doing quite well. Regions Financial is definitely doing the best. If we note that their market cap was around $23.8 billion and they did over $1 billion of buybacks last year, that means they bought back over 5% of the stock. And so the stock really should have been up a minimum of 5% just based on that, because shareholders now own more equity. And so if you had 100 shares, it's kind of like owning 105 shares now, because you've increased your equity by 5%. Taking a look at the totals, this is something I did just because we're looking at the states. So we can see a market cap of $72 billion. This market cap is not necessarily the most important statistic, but it's one that's interesting just to see the value of the largest companies and how that might compare to some larger states down the road. Revenue came in at $19.7 billion, which, as you can see here, is about 7% of the state's total GDP, based on that GDP figure of about $300 billion. Now, I will mention, just because the revenue of these companies adds up to 7% of the state's GDP, that does not mean that it is actually 7% of the state's GDP. They are doing business in other states, but because they're based here, a lot of that money is probably coming back in, and it's interesting to see how some of these large companies might have branched out to the point that they might do more in revenue than a state's GDP. For example, Walmart, who is based in Arkansas, does almost $700 billion of revenue. My assumption is that Arkansas does not have a state GDP of over $700 billion, as that would put it as one of the 10 or 15 largest states in GDP in the country. And last time I looked at the list, I don't think that they were that high up. And so some states might have a revenue to GDP of over 100%, which would be really interesting. EBITDA for the three companies stood at $5.9 billion, and net income at $3 billion. Most of that is coming from Regions Financial, as their margins were just so good. Total debt sits at $14 billion, liabilities at $148 billion, and assets at $178 billion. This leaves us with equity between the three of $30 billion, which is quite good. That actually would put our debt to equity ratio for the three at below 0.5, which would be quite nice. and their debt to EBITDA is below 3, so it's within that 2 to 3 range that we would like to call healthy. Free cash flow between the three was 3.5 billion. If you were to own stock in all three or own the entirety of all three companies, you would have been returned around $2.5 billion in capital, 1.29 in dividends, and 1.26 in buybacks. And remember, Encompass Health pays a dividend but does not pay a buyback, and that actually makes up a large portion of that gap. And then the three companies employ a total of 57,809 employees, which means that we have three companies that are very large operations, and so it was fun to take a deep dive into them. I hope you enjoyed this video on Alabama. The next state in alphabetical order would be Alaska, but as you can see from the chart here, Alaska only has two publicly traded companies based in it. Believe it or not, Alaskan Air actually comes up as based in Seattle, Washington, and so they are not a company that we would look into for Alaska. For this reason, I will likely skip Alaska, as the total revenue between the two companies is shy of $400 million, and they only employ about 1,000 people between the two. And so we will take a look at the third on the list, which is Arizona. Arizona is a much larger economy, and they have actually a plethora of companies we'd be interested in looking into. Some that kind of pique my interest would be Southern Copper, which just means they're worth 80 billion. Republic Services is like a waste management style company. We have Freeport McMoran, which is another mining company. I believe that is this the similar theme over there with Southern Copper and Freeport McMoran. They also have, technology companies such as GoDaddy, or they have very, very large tech companies such as, we have Microchip Technology here, and we have On Semiconductors. And there's a company I am looking for, Avnet, which is actually a company I might add just because it's one that I am interested in. They are a large distributor of technological goods, and so you can see the market cap's low because they're in a relatively low profit business. But if we look at the revenue here, we can see most companies are within this $5 to $10 billion range. We have some outliers with like Republic Services or Freeport McMoran that are much higher. But as we scroll down, we see like Carvana is at 12, or we see Reliance here, which is at 14. But as we scroll down and get to Avnet, we see that in 25th place they did $23 billion in revenue. And so they are, by revenue, one of the largest companies based in Arizona, which will make them an interesting one to look into, even if they aren't necessarily the largest company in Arizona. I hope you enjoyed this video on Alabama. Please like, comment, or subscribe, and stay tuned for this series because maybe I'll get to your state soon. This will be an asynchronous series, so I will probably interrupt some episodes with other of my series on specific sectors or industries. Next, I will be doing the shipping companies, so this will be UPS, FedEx, and DHL. Again, thank you for watching, and please join me in the next video.